Welcome back to Morning Trade Live. We go inside out on Expedia following the quarterly results. And Stacy is with us, economic strategist, wealth manager, Scarlet Oak Financial. So we combed through Expedia, which is up about 4% today after the quarterly earnings. Your thoughts on what the company told us?
Well, it's just so interesting. They gave us a better outlook going forward, and they surprised to the upside on almost all of their metrics. And the thing is that it's the travel demand. So Delta Airlines and other airlines reported potential weakness coming into the back half of the year. As of April, Delta even pulled its expectations and guidance, and then came back in July and said, just kidding, we have record revenues, and the travel demand is extremely high and has remained resilient since the low, since the pandemic. So is this just, it becomes a question, is this just summer travel demand? Are people just getting away for the summer? And is that going to die off going into the fall? Or is the business and other travel demand going to remain robust and have this area keep expanding? And then that bodes very well for Expedia. As far as the chart today, looking for a close above 200.
And so at this point now, so you think 200, how high can this name go? Are people going to be booking trips and such?
I'm just thinking that I know a lot of people who took last minute trips this summer. I'm also considering one in the next couple of weeks. And so it just remains to be seen whether the uptick really was specifically about summer travel, vacations, or whether the uptick is just brought more broadly, business travel and other travel. And so that kind of remains to be seen. But just watching the stock price, you've got an old high from about 6 months ago that it can go back and retest those highs. Otherwise, good momentum coming off of this news would be sort of a close above 200 today. So watching that on the intraday chart.
And when we think about things like advertising and bookings, I think the bookings part, before I get to the advertising, is really interesting. I think when you talk about the last minute bookings or the lead time in bookings, sometimes you'll have a lot of bookings and then the cancellations. Maybe the lead time is shorter based on what you're saying, right? But they're getting the bookings.
Right. Well, 17% of their growth came from their enterprise operations. So that means that, they're being providers for other credit cards and other mechanisms of booking. And then Expedia is kind of in the background. So that was kind of the largest segment of growth. And so that's very interesting. So people might be spending card points. I know there's a lot of that going on, too. And it's funny how they've restructured so many things like credit cards around travel, because, of course, I've, flown Delta forever. And now it's just based on credit cards and how much you spend. It's really not based on actual miles that you travel anymore. So this Expedia will remain in expansion mode if travel remains high. It would take a dip in demand in travel to, hurt Expedia moving forward. And we don't yet see any signs of a recession or, underlying catalysts for that.
It's interesting how they boost the investors' hope for a pickup in travel and travel demand. I mean, there's always also like excursions and things like that go with it too, right? I mean, do they make money on those?
I can't speak to specific excursions, but yes, I think they have different margins for various things that they are essentially they're a broker for all of these things. So I don't know the difference.
Some of the other travel names. I mean, when we look at what else is going on in travel, we used to look at Travelocity and Booking.com and maybe the airlines or the cruise lines. Are you seeing any trends at all?
Just that you had a softening of demand earlier this year, and we've had this kind of conversation. Is tariffs going to meaningfully raise prices? What does that look like? Are they not? Are we going into a recession? Are we ever going to have any sort of a credit dynamic play out? And none of those things have occurred. As a matter of fact, we thought that we would see a slowing in earnings, maybe potentially due to tariff impacts. And over 70% of the NASDAQ reported plus 27% year over year on earnings. So we're just not seeing those slowdowns. The one correlation that makes sense to me, and of course the specific of travel is many tiers down this sort of cause and effect relationship, is that the M2 money supply softened earlier this year. It bottomed out on April 28th. And then it reversed. So the markets, despite the fact that the Fed is keeping rates high, the markets are actually very, very liquid. Liquidity is going up. So travel, equity prices, bond yields, that all corresponds with the M2 moving higher. And you're just seeing that. You're seeing rates make lower lows and trending downward, and you're seeing equities remaining quite robust.
When I used to have guests on, they always used to pick Booking.com as their favorite name in the group. That name right now, 1 year, is about 58%, and did report at the end of July. And I see that the CEO talked about investing heavily in AI going forward. Lower income travelers have been under pressure, more pressure. Though they did raise their outlook. They had a beat and a raise is what they had. So that's why still looking good here year to date. But international travelers traveling to the United States less. So that, fewer. That's not a surprise. But the big picture was they also had some hope going forward for more travel and good news.
I use Booking.com myself, so no, I'm not saying that I comprise the entire demand, but no, it is interesting. That it's consistent throughout the sector, that this robust demand is keeping these companies profiting and expanding. So we expect that to continue unless there's some catalyst in the system that's recessionary, or in the labor market, or something that would quell demand, or if CapEx spending falls off of a cliff and business demand goes away. So right now the dynamics are pretty strong. And Delta restored its guidance for a whole year, so they're pretty confident as well.
I think we moved the markets because it started up 3.5% and now it's up 5.5%. Francis, Stacy, Scarlet Oak, thank you so much. Great to see you. Now we go and trade this name. Look, Expedia has gone from $112 up to $213, George. Not too bad. What do you say about this chart? You have some example trades for us, a more neutral approach first.
Yep. Yeah, so always tricky right after an earnings call. Looking at pre-market levels, I think the stock hit around 218, so it fell significantly since then. But if you actually look at the daily chart, that's how I want to structure the trade, going back to February, about 2 quarters ago, as well as the gap that we're actually seeing today. There's 2 gaps in the chart is what I'm looking at 195, and it looks like the 195 may hold. I can't say for sure, but I'm using that as a level of support in this case. And so I'm going to structure 2 bullish trades. First off, I'm going to look at selling a put spread going out to September 42 days with that 195 level in mind. So I'm going to sell the 195 put, and then I'm going to buy the 190 put below that. So altogether, we're going to sell this for a credit of $2 a share, or $200 a contract. So the whole premise behind this trade is for the 195 level to hold. That's where you'll maintain that max profit of $2 a share. 193 is the break even. And then, of course, if the stock falls even below that to 190 or lower, that's where you'll achieve max loss of $3. So you're earning $2 in this case, risking $3. The whole premise of this trade is premium erosion by holding that 195 level between now and expiration.
All right. And then you have a bullish example trade for us as well. Love to hear more about that.
Yep. Yeah, so the previous trade was bullish as well, but it's bullish for credit. What I'm going to do in this case is use that 195 again as an area of support for potential bounce from here. And it seems to be holding, at least right now, on an intraday basis. But I'm going to structure, in this case, a long synthetic combo trade. And I'm going to use the 195 area where I'm going to buy the 195 call, then I'm going to simultaneously sell the 195 put. Now, earlier, just about 10 minutes ago, you could have structured this trade for about $3 a share in debit, or $300 a contract. So in essence, 195 is the area where if it falls below that, you would be assigned shares at that price with a cost basis of 198. Because 198 is your break even. To which point, anything beyond that is profit available. In other words, there's unlimited profit potential in this trade. So 198 is the break even if you structure this trade. And again, it's selling I'm buying the 195 synthetic combo where you're buying the call and selling the put simultaneously for $3 a debit.
All right, George Tsilis, it's great to see you. Thank you so much for those example trades.